Welcome to today's Did You Know video. We are going to talk about renovation loans, what they are, where to find them, and why you might be interested in using one. So first, what is a renovation loan? Well, it's the way that you can use a mortgage to take the entire cost of a renovation and wrap it up into that original mortgage so that you're not having to do maybe a home equity line of credit or use your savings differently. You can have the same interest rate for one big loan that covers the whole thing. You can use it when you're buying a new house. Maybe you have a house that needs some work done. Or you can use it for your existing house if you have a renovation planned. It can be a great refinance tool to wrap the cost of that renovation into that mortgage. For this example, I'd like to talk about what it looks like when you're purchasing so that you can see the difference between spending the money on the renovation on a typical purchase versus having a renovation loan to be able to help you with that process. So let's say that you are already out house shopping. You have a $500,000 budget, which is not uncommon here in Fort Collins. But you want, that's the top of your budget, so you need that $500,000 house to be done. Everything's fixed, it's completely move-in ready and updated. Unfortunately, 10 other people are looking for the exact same thing in the exact same price range, and they're all putting offers down on the one house that you found that fit this. So how do you compete, or do you even want to? My suggestion is don't. That's where renovation loans come in so handy. So let's say you can find in that same neighborhood another house that's a lot less. Maybe it's 425, 420, 415, but it hasn't been updated at all. But you like the floor plan, you like the neighborhood, and you know that with the renovation, it could really be your dream home. And let's say that because it's been on the market for a while, because it hasn't been updated, that you can get a deal on it. So let's buy this house for $400,000. So you put an offer in at $400,000. They accepted it, now you're under contract, 30 days later you close. You need to bring to the table for your down payment. You can do several different down payments. If there's a first-time home buyer involved in the transaction, you can put 3% down. You can do 5, you can do 10, you can do 15, you can do 20. For the ease of math in this situation, we're gonna go with 10. So you're gonna bring $40,000 as a down payment on this house that was $400,000. Now you move into the house and you look around and you've made your list of the renovations that you'd like to do. So all of the changes in the house, maybe it's doing the kitchens and the bathrooms, maybe it's repainting the outside, doing some landscaping, floors, building an auxiliary unit out back that's a mother-in-law suite or a rental. You can do all of that with a renovation. Let's say after you've designed everything and you've had some contractor bids that your price has come out to a reno budget of $80,000. Which is not an unreasonable budget for a house of $400,000 if you're doing a lot of stuff. So now you've paid $40,000 for this down payment, which has made your mortgage relatively lower than it would have been if you had purchased a house at $500,000. But you're also coming up with the $80,000 to do this renovation. So you've now taken $220,000 out of your bank account to put into this house. This is great if you happen to have $120,000 to do it. Maybe you've sold another house and you have the equity from the old house and so you're able to do this. If this 120 isn't allocated somewhere else in your life needs, then great, I would use this so that you can maintain that lower principal balance. But the reality is most of us don't have this, or there are other things that we'd like to allocate this for. So that's when the renovation loan comes in. So let's say it's this exact same house. We've put an offer in, the price is $400,000. The difference is as soon as we go under contract on this house, we're gonna change the dates and deadlines. We're gonna go out 45 days at least instead of 30, because we're gonna need some time in those first couple of weeks to come up with our renovation plans, to get some contractors involved, to get some bids, and then we're gonna take that to the bank. And it's the same house, so let's say we came up with the same renovation budget. So we now think that we're going to spend $80,000 fixing up this house. We have a good contractor bid that seems pretty in line with the other bids that we got. We're going to present that to the bank. The bank is going to take this and they're going to hand it over to an appraiser and they're going to say, go take a look at the house and the renovation plans and come back with a value. So that appraiser is going to walk into the house and they're going to say, okay, 400 looks good. Here's the renovation that's planned, and guess what? Our resulting value after the renovations are done, that's where this is different, you get the value on the after built, is gonna be $500,000, and that's right in line with what you thought it might be because you were already looking at that $500,000 house in this neighborhood. So your project is approved, and you get to move forward with all the normal contract things like inspection and your loan objection, and then you close on the 45th day, and their bank is going to say, this renovation is going to cost $80, but let's build in a little bit of a contingency, and they're going to usually do 10%. So they're going to add another 8 to this. So when you come and close on that 45th day, your loan is now $488,000. So your down payment is going to be $48,800. So this is your total amount out of pocket for the exact same house with the renovation project done versus buying it and doing the renovation project later with your own funds. So it's only an $8,800 difference for the same scenario, and that's how this really works if you don't have all of this money that you want to use up front and you'd rather have it rolled into your mortgage from the get-go. The other nice thing about a renovation purchase is that the bank is handling this. So on that 45th day when you close and you hand over $48,800, they now have the $88,000 actually sitting there in their own bank ready to disperse to the contractors when they ask for their draws. So they're kind of helping you as a third party make sure that the project stays on task, because you typically only have 6 months to get all of the work done. And they're the ones handling the finances too. So that's a little bit different than this if you're taking it on yourself or you're hiring a general contractor and you're in contact with them. So that can be another level of comfort with the renovation loan, is that there's another third party that's involved in this. And then when it's all done, that's when you get your first mortgage payment due. So when you can actually move in and the work is done and all of the funds have been dispersed, that's when you start paying your mortgage. So it can really be advantageous financially to use a renovation loan. There are a couple of different options as far as these go. FHA and conventional both offer one of these. The FHA version is called a 203K loan. And you may have heard of this or not, but a 203K loan, it's basically a rehab loan, so it's a renovation loan. There are a couple of versions of this. One's limited if there's some small projects that need to be done, and the other's sort of standard. Then the conventional is called a home style. So if you have a lender that you really like working with, and this is a loan that you think could work for you, these are the products that you're asking for, or you can Google them and find more information. As I said at the beginning, a lot of these, we want to know where we find these, right? So most lenders offer this, but not all of them advertise that they offer it. There's a lot of extra work and there's a lot of extra time that goes in processing one of these loans. So they may not all say, yes, we want to help you do one of these right off the bat. But there are a couple lenders that are here in Colorado that are very good with these. They do them regularly and they're not scared off by them. So if you feel like a renovation loan is something that you'd be interested in or could really help in your particular situation, or you're looking for a house where you can do this, feel free to ask me questions, some advice. I'll send you some name of some lenders that are willing to do this. And I also have some great PDF documents that kind of explain a lot of the details and more of the fine print on this as well. So these are renovation loans, and this is today's Did You Know video. Thank you for tuning in.